Is Commodity Wrap. I'm Tony St. James, halfway through the week. Actually, a little more than halfway because just 2 trading sessions left till we get to a long 3-day weekend. Monday markets are closed in observance of Memorial Day, so we've got some trading to do on Thursday and Friday in front of that. So how did we end up on Wednesday? Pretty much higher for the row crops. Corn higher, soy meal, soy oil, all higher. All 3 wheat exchanges, higher territory. Also higher for rice and for oats. I know I'm stretching it as far as I can. Cotton market, though, in the red. Helping us to break it down, Brian Hoops, President, Midwest Market Solutions. Hey, Brian, welcome back to the show.
Hey, Tony. Long time since I talked to you this morning, in fact.
You know, things started this morning, and I really wasn't sure what direction things would go. There's some outside chatter, if you will, and pressure on the equity markets. Dow, NASDAQ, S&P have all been in lower territory on Wednesday, but really it's almost as if the row crops, the commodities, just said, hey, we've got our own story to tell and took off. Would you agree?
I would agree with that. Yeah, they've kind of divorced themselves from a lot of things, the equity markets, even the tariffs. When we saw a lot of the tariff news hit, grain markets kind of followed it for a day or two, but then kind of divorced themselves once again and just did their own thing. And that's good. That I think the farmers and everyone really wants to just trade as their own fundamentals and just look at what is supply and demand telling us and how's our planning progress, and let's trade off of that instead of tariff news and other things such as that. So we did have the dollar down a little bit this morning. That is encouraging to buy commodities in general. We saw, gold and silver commodities that really benefit from a weaker U.S. dollar. Those were stronger today, and grains in general really benefited from that weaker dollar. Of course, you're starting to get into this weather time frame, and there's always weather somewhere around the world. It had dried off for a bit in Argentina, allowed some harvest pace to catch up, but now it's starting to get wet once again. And it looks like the harvest could slow down for corn and soybeans. So we're putting in a little premium in corn and beans here in the United States as a result.
I want to tee up wheat, and I'll probably come back and talk soybeans and corn again here in a moment, but just watching the wheat market, all 3 exchanges higher territory, and this doesn't happen very often, or it hasn't happened very often this year, where you can say we're in positive territory for the week, the month, and the year. When it comes to wheat, was there some short covering that was going on here?
Absolutely. That wheat market, had a lot of fun selling to new record shorts in the Chicago wheat contract and pushed Kansas City to touch the $5 mark. And since that time frame, we've had some short covering that have lifted prices off of those lows. I like to think it's somewhat due to weather, that crop condition ratings improved quite a bit. And then we started to run into a little bit drier stretch of weather, especially in western Kansas, western Oklahoma, Texas. That panhandle really dried out, and that's where we're going to see yield losses start to creep in. So there's a lot of moisture across the eastern part of Kansas and Oklahoma, Tulsa, Wichita, those regions, very good wheat growing regions. There's going to have a lot of crop there, but they're having plenty of moisture. It's other areas that are going to start drying out, and that's why we've had this short covering. So it's over 40 cents now off of our lows in wheat, and that's, I think, has spilled over to corn and soybeans as a positive as well. We've seen with the wheat market rallying on short covering, corn and beans rallied in addition.
All right, we saw a pretty big sell-off in the bean market a week ago, really prompted by a sell-off in soy oil, and that was because of, thoughts that we would not see the kind of RVOs, volumetric obligations, under the RFS, the Renewable Fuel Standard from EPA, the Environmental Protection Agency. How many more acronyms can I throw in here? IDK, I don't know. But the point is there was some fear that we weren't going to get the numbers the industry had hoped for. The soy oil market sells off, and therefore soybeans move lower. Higher close for all three across that entire complex on Wednesday. Are we at a point where we're past that? Is there more to trade?
Well, there's going to be more news coming out, and more clarification of what's happening. How long will it take for the RFS to determine how much biodiesel we're going to use and how much bean oil will be used for that? So there's going to be uncertainty down the road, but we went from that extreme volatility that you mentioned with a lot of unknowns, a lot of rumors and facts being thrown about, to now we're kind of not trading as volatile, and it's more orderly type trade. And so, again, we're not being hit with rumors each and every day or tweets or comments, and that's given us a little bit more stability in the markets. And I think the traders as well as producers out there want that stability. They don't like the wide swinging markets because it comes off of news that they don't have a chance to digest or react to.
All right. Brian, hang on. We'll take a break. We'll be back in a moment. We'll pick up more markets on Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. On a Wednesday, special guest, Brian Hoops. Brian is President, Midwest Market Solutions. We're talking all things commodity right now. We spent time in that first segment really working on the row crops there, which, by the way, all of them settled higher with the exception of the cotton market. We move over to the livestock side, and we saw mixed trade. Higher for live cattle, feeders lower, and the hogs lower as well. We're talking about three markets that have gained 9 to 23% year to date. The one that's gained 9 gained some more on Wednesday. That was live cattle. Any of that tied back over to ideas of cash trade moving higher?
Yeah, we saw some bids starting to surface after limited trade yesterday. Bids in Nebraska on the dress basis 360, live basis 229. Tells us that we're going to be at least steady to higher this week for the cash markets once again. Really look at, the structure of this market. We're discounted to all this cash trade and all of our futures contracts, and I think it makes it really hard to sell. There's a lot of technical traders that point to the weekly reversal that we had last week, and that should be the high for the year. But you still have conflicting fundamentals. Fundamentals are all very positive, very friendly to this cattle markets. You look at, do you really want to sell October cattle at 206 when the cash markets are 218 to 220? That's a hard thing to do, I think, especially when you would be selling or hedging at a loss, because the price of the feeders right now are so expensive, and it puts a lot of risk out there. Break-evens are higher than what the futures market is offering for a price. So I just don't think there's going to be that much selling pressure coming into the market. The biggest risk I think we have is fund long liquidation. We saw what could happen with a 2-day drop in the futures market last week. It was a several dollar drop, $7, $8, $9 drop in just 2 days. That's the biggest risk I think we have, is these funds that are holding big long positions decide to exit, and when they all want to go out the same door, it gets really crowded. Consumer demand has probably softened up a little bit, probably will continue to soften if the markets stay elevated, but we are going into the grilling season, and I've seen some reports that they are expecting a lot of strong grilling season here over Memorial Day. Expected increased protein intakes, not only beef but also pork and chicken. So there's going to be, I think, a good demand for product this summer, and hopefully beef will be included in that, even at higher price levels.
And throw in cattle on feed report on Friday. We'll get it after the close and then have to sit on it for 3 days. Any thoughts on the cattle on feed?
Yeah, you're right. The on-feed numbers that are coming out on Friday, it will also be a cold storage report Friday. We won't be able to react to it until Tuesday morning for beef and pork. The estimates look to be very friendly, with placement numbers at about 96.8% compared to a year ago. On feed supplies, we know are going to remain tight, 98.5% of last year. Marketings will probably slow down a little bit because we have less cattle that we're selling. Right now, we're just feeding them out to a little bit heavier weights, but there are fewer numbers being sold. Packers are cutting the kill speed, so we expect to see less marketings. But that placement number tells us supplies, even into the third quarter and the fourth quarter, should remain very tight relative to a year ago level.
All right, Brian, if we want to keep up with you or Midwest Market Solutions, can we find you easily?
You sure can. We have an easy address, website address, MidwestMarketSolutions.com, where you can sign up for our daily newsletters, our text message service, subscribe to our YouTube channel, everything right there at our website, MidwestMarketSolutions.com, including a list of all of our offices and their phone numbers.
Midwest Market Solutions. He's the president, Brian Hoops. This is Commodity Wrap.